Welcome, friends, to the Probate Nation. I am Richard Ruddy. Our show this evening is about how to properly prepare the Virginia Conservatorship account. This document is filed annually with the Commissioner of Accounts and imposes a stricter level of detail. And for the first time, there is the need to document every penny received and dispersed. I mentioned in our prior shows, a famous golf expression called the mulligan, and this is an expression named after a locker room attendant named John Buddy Mulligan, who was known for replaying his golf shots, particularly on the first tee. Our experience is that you will get fewer do-over opportunities for the conservatorship account. And in fact, if anything can derail your living probate train ride more quickly, is failing to properly account to the commissioner. So the goal of this show is to detail how to prepare that account properly the first time. And to lead this discussion, we are pleased to have back with us Brian Lowell from Grinnings & Lowell to walk us through the preparation of the account. Now, Brian has been with us a number of times. He is the co-founder of Grinnings & Lowell, a Fairfax City accounting firm founded in 2014. This firm specializes in Virginia inventory and accounting filings submitted to the local Commissioner of Accounts for estates, trusts, and conservatorships in Virginia. Prior to forming Grinnings & Lowell, he worked as an auditor for the Fairfax County Commissioner of Accounts for several years. Please welcome again, Brian Lowell. Hi, Brian. Thanks for coming back to continue to walk us through. I know you helped us greatly when we did the recent show on the conservatorship inventory, and so I'm very happy that we're going to be able to kind of follow that inventory now onto the accounting and see how things play out and how they should be properly reported. So let's go ahead and just take a look real quickly at the first part of the accounting form. So this accounting form has a lot of information up top. Where does everybody get all this information? What goes where, and what are we trying to communicate with this particular section of the form?
So this section of the form is trying to communicate really identifying information for the matter or the conservatorship. So what's the court reference number, the court file number? That's typically referred to as the fiduciary number. That's going to be found on your certificate of qualification, your qualification papers that you received from the clerk. And then you want to know, again, where's the circuit court, what the jurisdiction is, what's the name of the ward, where does the ward reside? So this is going to be new relative to the inventory. You want to know, are they in a nursing home? Or are they living at home with the conservator or guardian? And then finally, you want to identify the fiduciaries involved. So, who are they? Who are you? Do you have a co-conservator? What's your telephone number, your address? Keep that information relevant and current so that the clerk and the court can contact you if they need to.
So the inventory was due within 4 months after qualification, and the first accounting is due 6 months after qualification. Do I have that correct?
That's correct. So the first accounting is going to be a 4-month accounting. It's going to cover from qualification date till 4 months later, and then you've got 2 months after that period ends to prepare the accounting and file it with the Commissioner's office. Okay.
All right, that's important because I think people got to know they're on the clock to get stuff done. Let's go ahead and take a look at some of the things that actually go on the form. So let's take a look at the beginning assets. That's going to be the first line, which is line 1. Where does that come from?
So line 1 comes from parts 1, 2, and 5 from the inventory. One thing to not get tripped up is the inventory total on the inventory form will have parts 1, 2, 5, and 8. So it includes some of the periodic income from government agencies. When you get to the accounting, that periodic income is not an asset anymore. It's maybe something income received. So you just want to show parts 1, 2, and 5.
I think that is important because I think people have to understand that we're looking at the actual balance sheet assets, basically, not your income stream.
Exactly.
And now, what would normally be attached, if anything, to support our opening inventory numbers on line 1? Our opening accounting from our line 1 assets.
So a beginning asset schedule is not required, but I do think it is a good practice to do that. If nothing more than to keep your mind right, to keep yourself organized with the assets. It makes tracking carrying values much more easily if you've already have a schedule of what the assets are and what their values are.
Okay. So you probably would not have back an approved inventory at that point since you have to file so quickly. So you may need to, you could just attach a copy of your filed inventory, I suppose, and that would be sufficient. Is that true?
Yeah, I've seen that happen, and that's usually accepted.
Okay.
Typically, yeah.
All right, so let's talk about receipts. Okay, line 5, this is reporting on line 2. We go to receipts. So let's talk a little bit about that. So let's begin with, first off, are receipts the same as income from a tax standpoint?
From a tax standpoint, no. What receipts are basically anything received into the conservatorship. So they may not, they could be tax refunds, federal tax refunds, which are not going to be taxable. There could be any other source of anything that gets any refund, any interest, any dividend checks, any kind of payment that the conservatorship receives. You're going to want to identify in the receipt schedule.
Okay, so periodic payments from the Social Security or pension, does that go under receipts?
Sure. Anything that is received into the conservatorship accounts. Now, with Social Security income, you could have, there's some situations where you have a rep payee that's designated that receives the income outside of the conservatorship assets, so that may not get reported there. But typically, any income from Social Security that's not part of the designated rep payee program is going to go right into the conservatorship bank account, and it's going to get recorded on the receipt schedule.
And then for interest income, I have bank accounts, I have money markets. Do I report the interest and dividends I'm receiving here as well?
No matter how small the interest is, you have to record not only the amount of the interest, but the date it was received and what it is. So you want to say, I received 5 cents in interest from my Bank of America savings account on October 5th. And that's one item on your itemized schedule.
So if you're getting 12 interest payments from that bank account, you have 12 entries. Got to get that
You're going
off.
to have 12 entries, each one individual. Don't round, don't sum them up.
Yeah, that will definitely get you in trouble for sure. Brokerage accounts, same thing. We have the gains. They have very dividend gains that come out during the course of the year. You have multiple brokerage statements, but you need to report each month what you got from that brokerage statement.
That's correct. I think the dividends are important to identify. I think the other thing is if you have a long-term capital gain or short-term capital gain that's generated from a fund, so you didn't necessarily sell the asset, but the fund sold some underlying securities and they issued a check and called it a short-term capital gain or a long-term capital gain, you would report that under receipts.
Okay.
That's going to be different from other sales that occur where that gets reported separately.
And that's important to know. People will get sidetracked about that. How about retirement accounts? If I have a retirement account that's making money and earning money, do I need to report that as well as receipts?
If you've actually received the funds, so I think one thing that people get tripped up is, hey, it grew in value. That doesn't get recorded. That's called a market value fluctuation. So we don't report that here. But if you actually sent you a check, they sent you a dividend, they sent you interest, report that on receipts.
Okay. All right. Well, let's go back. We talked about a bunch of the typical receipts. Let's talk about the documentation, which I think is the biggest source of problems. Okay. Tell me what kind of documentations we need to have attached to support all those various receipts we get on line 2.
Yeah, the funny thing with receipts is it's the one schedule that some commissioners' offices will not audit. They don't typically do an audit beyond just checking the math and checking to make sure that the items are properly identified and distinguished. But typically it's good practice to show bank statements and brokerage statements where you actually show the interest hitting the bank account and show the corresponding balance as a result of it. So what I think is a good practice for fiduciaries to get into is to provide full copies of monthly bank and brokerage statements to the commissioner's office to support every transaction that's on the accounting, even if they're not necessarily going to be audited.
So, yeah, and I think it's important for folks to know, if you're using these bank statements and you start with $1 and you end with $5, everything in between affects how you get to that $5. And if you don't pick that up, it's going to cause you to be out of balance when you try to make sure this accounting balance. Well, let's look at the next line, line 3, which talks about gains. Tell me a little bit about what we're looking at here.
So here you want to show any sales of assets where you sold it for a value that was higher than your inventory value. So this happens often with brokerage accounts. The big thing here to keep in mind is that your basis for the brokerage statement might be different than your basis for the inventory. So the basis we care about is your inventory, your qualification value, not necessarily when the asset was originally bought. And what you want to show on the gains on asset sales schedule is, again, the date of the sale, what asset was sold, how much of it was sold. Was it we sold an entire car, or we sold part of a stock that we own? How many shares, what was the proceeds for it, and then show what the relative gain is. So that's going to be the delta between what we sold it for and what the inventory value was.
So folks that have brokerage accounts, this is probably one of the biggest sources of confusion, because you look at your brokerage statement and they'll have a line for an asset that has two numbers. One will be your cost basis when you actually bought it, and they'll indicate what day you bought it, and then they'll have its current fair market value. So when you actually get qualified, you know, that date of qualification, you have a fair market value, which is going to be completely different typically from your cost basis from a tax standpoint. So I think that's the point I think you're stressing, is that we don't get confused about that, that just because I have taxable gain, it's not the same as gain as far as being reported to the commissioner. Let's talk about a real estate sale, though. That gets really confusing, because I have a piece of real estate, which on the inventory we did in our initial show, the inventory showed a piece of real estate. I sold that real estate. I had a mortgage. I have a HUD-1 statement. We have all that activity. How does that get reported here?
So the best course of action, what's best practice here, is to show the gross sales proceeds and then show the itemizations of the different the payoffs of the mortgage, any other seller financing, anything that kind of offsets the gross proceeds. You want to typically itemize and have it mirror the HUD-1. That would be ideal. I have seen accepted where people just show the net sales proceeds, so what was actually deposited into the bank account as the sale price, and then showing that as a gain or loss, depending on what the inventory value is. So either or, although I would stress that we typically try to show as much information as possible.
Okay, that's good to know. So then line 4 on the accounting form has to deal with adjustments. Okay, so what typically goes here? What are we adjusting?
So this is kind of a catch-all schedule, and it could be a few different things could happen here. Sometimes you might find an asset that you didn't know existed when you filled out and filed the inventory, and now you want to do your mulligan and say, okay, let's put that in on adjustments and bring it in without having to refile an inventory. So that's acceptable. In some cases, you got the value wrong. You thought it was $5,000, it's really $3,000, and we have documentation to show that the valuation needs to change. And you make an adjustment to help correct it. There's a lot of different instances where an adjustment comes into place. Sometimes assets change name, so you might have a fund that changes from one thing to the next, even though it has no bearing on the carrying value. I'll typically report it under adjustments, just so the auditor can keep track of, just make it life a little bit easier and the audit a little bit easier. So I try to use it as a schedule also to provide as much information as possible to the auditor that may not fit in other parts of the accounting.
So if I have multiple bank accounts and I'm closing out a bank account number 1 and I'm closing it into bank account number 2, would you put it there just, even though there's no dollar change per se, would I still report that there just to let you know that the money is transferred over?
It's a good practice. You may not get called out by an auditor for doing that, or for not doing it, let's say, but it makes the audit much more run more smoothly when you provide more information to the auditor, so that they can say, okay, I understand, we closed the wards accounts, we opened up a conservator account, we moved the funds in there. Net, there's a $0 change on the adjustment schedule, but at least now the information is present and I can track the assets accordingly.
And under line 4, do we use this particular line as a way to show adjustments in value of the asset that we're holding?
You do not. So
Okay.
as market value of the assets change, you will not record that change at all, really, until you get to the end of the accounting and you show the fair market value along with the carrying value.
Okay. So we add up line 1 to 4, and that gives us a total on line 5, and then we don't really need to talk anymore about that. The next thing I want to talk about is disbursements for debts and expenses. So this is on line 6. So we have a PowerPoint that kind of shows a little bit about some of that activity. So tell me a little bit about the importance of what bank you select to be the conservatorship bank account.
Sure. So this is probably the strictest or one of the stricter schedules that gets audited. What commissioner's office want to see are copies of canceled checks and invoices to support every expense. So they'll look at every single expense that's on there. They'll look at every paper statement fee, monthly fee, every check you ever wrote, every ACH payment you ever made during the conservatorship. They want to see documentation to support each one. And that's usually in the form of a canceled check or a paid invoice. And usually you want to support it with an unpaid invoice just to show if you only have as a canceled check, show an unpaid invoice as well, just so you can show that's a proper expense of the conservatorship. To your second question about why is it important to select a bank here is because you can save yourself a lot of trouble by picking a bank that produces images of canceled checks as part of their monthly statements. Now you have less documentation to collect when it comes time to file the accounting because you already have the statements already, you already have the check images already, and the commissioner's office will accept check images as part of the monthly statements. So it makes it a lot easier if you get that set up from the get-go.
Right, and I would say that I think you can certainly, some people with online banking may be able to print off a paid check and get the front and back print off, but it's just a lot easier to have that automatically produced with your monthly statement. And I would say too, I have seen more recently that basically every check that's dispersed, we want to have a receipt, an invoice that goes with it, so we can track why we're paying it. Are you finding that to be true?
Yes, I think that that's a good practice, even if a commissioner's office may not be as strict about it. One, because somebody else might ask you questions about it, and you want to make sure that you have everything properly documented, that everything's above board. You can show the invoice for the lawn mowing was really for the ward's house and not for my condo down the road. That's the sort of thing you want to have on hand and have filed just in case there's any other questions that could come up.
Okay. And generally, the proof, the type of support that's not acceptable, if I am paying a bill and I make a copy of the check with the invoice before it goes out, but I don't produce a copy of the actual paycheck, is that going to fly with the commissioner on audit?
It won't, and we see a lot of fiduciaries back in my auditing days would do that. They would just take a picture of the check, put it on a copier with the invoice, send that over. That's not acceptable. They want to see the canceled check. They want to know with absolute certainty that that check went to that payee for that amount, and they won't accept anything below that standard.
Okay, so I think I want to stress with our viewers that this is probably the area where there's the most exceptions appear in audit exception letters. It's just the documentation for these disbursements. So it means important to just get in the habit from the very get-go of doing it correctly. All right, let's talk a little bit about line 7 now, losses on sale. So again, we're talking about accounting losses from the Commissioner of Accounts standpoint. Tell us a little bit about what gets reported here.
So this is the corollary to gains on asset sales. This is going to be anything that you sold for a value less than was on the inventory, which we typically see happen with real estate, and what we typically see happen with tangible personal property or vehicles or anything like that. You'll typically have a loss on those assets, and so what you want to show, similarly to gains, is the date. You want to show what the asset was, what the proceeds were, and then if it's a stock or something like that, you'll show the number of shares, and then you'll show the delta between the inventory amount and the sales proceeds. And it's important to also know that this is a positive number. So every number on the accounting is positive. The only place where you can do any sort of negative numbers is under the adjustment schedule. So that's another thing to keep in mind. But this is a positive number. It's the absolute value of the delta between the proceeds and the carrying value of the asset.
Okay. All right, let's go to line 8. So line 8 talks about distributions. So, and typically you don't see a lot of distributions to the ward because they're incapacitated, but we have an example where somebody might have been able to regain the right to be in charge of their assets because they're no longer deemed to be incapacitated. So tell us a little bit about how we would report that here.
Yeah, I think there's two instances where you're going to have distributions, and they don't typically happen. They'll happen in the case where the ward regains capacity. So maybe they were in capacity for a period of time, and then they prove to a court that they now have capacity. You're returning the assets to the ward. And the second instance is in the case of the ward's death, and now there's an estate where you need to distribute the assets to. What you want to show in the distribution schedule is it's very similar to disbursements. It's going to show the date, it's going to show the asset itself, and then the carrying value of the asset. So you're not going to report, the new market value of the asset on the date of distribution. You're going to continue to show that initial inventory value as your carrying value.
And in the case of distributions like this, we would get to document that. It's not just a check necessarily, but it might be an original signed receipt by the recipient saying, I received this asset or this check. Is that correct?
That's correct. So I tell people the commissioner's office doesn't accept copies of receipts. So use blue ink and have them sign it wet and file that with the commissioner's office to show that the recipient actually got the distribution.
All right, this next one is the one that gets really, and this is line 9. This is the assets on hand. So this is where I think you get confusing, because we talk about having what we call carrying value, and then we talk about fair market value. Tell us a little bit about how we prepare the assets that are actually going to be shown on line 9.
So on line 9, you're going to show the inventory value of the asset adjusted for receipts, disbursements, sales, distributions, whatever it is. So in the case of, let's say you have a stock that hasn't changed, you didn't buy any additional shares, it's going to be the same carrying value as you reported on the inventory. You're going to show the fair market value separately. In the case of cash, it's going to match whatever's on the bank statement. So carrying value and market value are the same. So you have to just adjust it for any transfers or expenses or receipt, whatever it is. In the case of a stock where you've bought more securities or sold more securities, that's where the math gets a little bit tricky, because now you have to increase the carrying value by the amount of any reinvestment, or reduce the carrying value by the amount of any sale, and then reflect that proper carrying value. So that's where it gets a little bit tricky. If you have a lot of that going on, you might need professional assistance. But at the end of the day, we take a step back and look at the assets on hand schedule. What we're showing is the initial inventory value adjusted for where we are currently in time. And then we're showing the fair market value. And the reason why we're showing that is because you need to be bonded for the total fair market value of the assets under your control. So we want to make the commissioner's office going to look at that and say, okay, is the bond appropriate based on what the current value of these assets are?
Okay, yes, very much so. Now, so I have these assets on hand. I have a whole list of assets. Do I have to document with supporting statements how I got that value?
Absolutely. So when it comes to all of these assets, what you want to show are bank and brokerage statements on the end date of the accounting period. So in the case of securities, you're going to have shares that reflect the shares on the statements. You're going to have the fair market values be reflected on the statements. It's all going to tick and tie together. You're going to have the cash accounts are going to match perfectly 100% to the bank statements. You're going to show all these different assets are validated with proper documentation. In the case of real estate, you're going to show tax assessed values to support any current fair market value changes to that, and so forth.
Okay, so we have up on the screen. Then we've completed lines 6 through 9. And so those get total up on line 10. So we have on the screen now the page of accounting page filled out completely. So you see that line 5 and line 10 have to equal. If they don't equal, is that a problem?
That's a problem. You're not going to get approved if they don't match. So this is where it gets a little hard for lay fiduciaries to figure this out. And even some professionals who do this, it can be tricky. Especially as you get into when you have churn with brokerage assets, that gets a little bit hard. But even with cash, just keeping track of the transfers and the movement of it can be difficult. So you want to make sure that even if something's not reported on a schedule here, but it's still impacting the carrying value of an asset, that you've done so properly. And if you do it, then lines 5 and 10 will match.
So we are again running out of time because the information is just so voluminous. So thank you so much for this, Brian. Tell us about the common account issues with accounts that you see as an auditor or have seen.
So I think probably two things. Documentation is a big one. Most people struggle with how to properly document the transactions they're reporting. You want to probably over document in this case. So you want to show bank statements and canceled checks. You want to show brokerage statements to show sales or some type of bill of sale to support a gain or a loss. You want receipts for any distributions. The main thing though is the canceled checks and the receipts, the invoices rather. The invoices and the canceled checks to help document that.
Okay. Well, Brian, we are really out of time again. So again, I want to thank you so much for taking the time to come back and help continue the story. We started with the inventory. We did the accounting now, kind of connecting what had transpired. I think it's going to be a great help for folks that decide they want to prepare their own inventory and their own accounting form. And I want to thank you for taking the time to help share your experience and your expertise on how that should be done properly. So again, thank you again for that great public service.
It's my pleasure. Thanks, Richard. Appreciate it.
You know, for those of you that are inclined to prepare the conservatorship account on your own, I think this show, as well as the show on the inventory, will give you some great guidance on how to do this properly. But, you know, as Brian pointed out in its closing remarks, I want to stress one of the key responsibilities of the Commissioner's Office is to trust but verify. So do not ignore a letter from the Commissioner's Office telling you of an error in the account or a need for supporting documentation. There are no mulligans for silence, and if your silence continues, you may very well be escorted off the living probate train. So if you find yourself baffled as to how to respond to the commissioner or even how to prepare the account, reach out to an attorney or an accountant for guidance. The Commissioner's Office will appreciate your diligence. Friends, this brings us to the conclusion of our show. I hope you found it helpful. You know, replays of this show can be viewed on the Probate Nation website and YouTube channel. Again, thank you for visiting with us, and until next time, good luck on your probate journey.